Welcome to Finance Week 3. This is your online instructor, Diana Block. And this week we are going to look at financial analysis using the statement of cash flows and ratios. And so this is a lot of information involved in these two chapters, chapter 3 and 4, that are assigned for this week. And you're going to cover quite a few financial concepts, and we're going to do a comprehensive problem for the homework assignment that's going to touch on several different areas. So I figured we could use that assignment as kind of a springboard for our lecture video discussion today. So if you open up the assignment, this is what you're going to find. You've got the balance sheets and income statements for 2 years for a specific company. So you've got year 1 and year 2, your balance sheets, and you can scroll down a bit to see the rest of the balance sheet, and your income statements over here. So the first thing that you're instructed to do is to create a statement of cash flows based on the balance sheet and income statement information that you're being provided with. And so if you look at your textbook, you're going to see, I believe on around page 79, you're going to see a statement of cash flow example problem. And in that example problem, you're going to see some information similar to what you have here in your homework problem. You're going to see 2 years worth of balance sheets, and then you're also going to see an income statement for a company. I'm referring to the example on page 79. And then as you continue to page 80 of your textbook, it's going to walk you through how you're going to create a statement of cash flows based on the information that you have for in the income statement and the balance sheet. And so it goes through each section, how you're going to create the operating activities section. The operating activities are things that a company does on a day-to-day basis to conduct its business. So we're talking about buying inventory, producing and selling the product, paying expenses and taxes. So that's all going to be in the operating activities section. Then you're going to read through page 80 and explains how to take the information like net income and convert that to the operating activities section. The information that you have in these balance sheet and income statements is going to be used to convert into the operating section of the statement of cash flows. Then if you continue to page 81, you're going to see the investing activities section of the statement of cash flows. And the investing activities section lists any investment or cash flow from fixed assets. So that's going to be a pretty easy section to fill out. If there's any purchase of fixed assets, then you'll record that there. And then you'll also have the financing activities section, and this is going to be a record of any increases or decreases in long-term debt, sale of stock, dividends paid. That's where that information will be recorded. And if you go through page 81, it'll tell you how to find that information from your income statement and balance sheet, and then get it transferred over to your statement of cash flows. And so you will be able to take all the information that you have in these two sections and transfer it to the statement of cash flows. You're going to look at any increases or decreases in those accounts in order to determine what cash flow actually took place. So what we end up with, it will be your statement of cash flows, and this is an example from your textbook of that example company that we talked about. It's on page 82. And so from the information on pages 80, 81, 82, it walks you through how to set up your statement of cash flows from your balance sheet and income statement information. So the first section you're going to create is the cash from operating activities. And so you can see you're going to start with net income, and then you're going to add back any non-cash expenses like depreciation. And then you've got, any change in your current accounts, any changes in your asset accounts, you're going to calculate so that you can see what the differences are from one year to the next, and that'll tell you how the cash has changed. So depending on what information is given to you in the problem, you'll just make sure you add back any non-cash expenses like depreciation, and then account for all changes in your current assets and liabilities, except for any notes payable or dividends payable. But these instructions are in your textbook, so make sure you're following that. Then, like I said, you'll get to your cash from investing activities. So you may have purchases or sales of fixed assets, so make sure that you record that there based on the information in your problem. This is just the example from the book. And then you'll have your cash from investing activities. And you'll combine all those sections to get your actual net cash flow. And then you'll take your beginning cash balance, your net cash flow, to get your ending cash balance. So you can see that full example of a statement of cash flows and all the steps that were taken to create it from the income statement and balance sheet in your textbook. Just follow along with that example. Now let me go back to this homework problem. After you create that statement of cash flows over there, part 2 is that you're going to create common size income statements for these 2 years that are available. So with a common size income statement, sales is going to be your base number. So sales is going to be 100% in both cases for both years. Then you're going to calculate every other line item as a percentage of sales. So you're going to go back up to your income statements here, and you've got your cost of goods sold. And I'm just going to go ahead and use the Excel formula. This is in cells F11, 10 and 11, F10 and 11. So I'm going to calculate cost of goods sold as F11 divided by F10. And so we see that the cost of goods sold, 631, is 39% of the total sales, which was 1578. And so what I'm going to do is format all of this as percentages, so it'll come out the way we want it. Format as percent. So there we go. It rounds it up to 40%. And then you're going to calculate your gross margin, which is F12 divided by F10. So you see every line item is going to be a percentage of sales, and you will do that for both year 1 and year 2. So sales is the 100% figure. Create every line item as a percentage of sales. So you're going to be able to see what your percent net income was for year 1 and how that percentage changed year 2, as far as what percent of your what percent of sales became net income. So that's how you would create the common size income statement. So instead of numbers in this income statement, it's going to be all percentages in this common size statement. You're going to learn about common size statements on page 88 of your textbook. The information is there about common size statements and how to create them. So make sure you go through that information. There's a great example of a common size income statement on page 89 of your textbook. So then the next section of this homework assignment is where you're going to go down and do ratios. So you're going to use the information we've got in the income statement and the balance sheet to then calculate some ratios for year 1 and for year 2. So you've got unique formulas for each of these ratios, and there's a summary of them all on page 101 of your textbook. So it gives you the ratios for your liquidity ratios, your asset management ratios, your debt management ratios. All of these are listed out on page 101, and it gives you the formula for each one. And so you'll just take those formulas and plug it into the information you have. For example, page 101 tells me the current ratio is the current assets for current liabilities. So I'll take that information off of the income statement for your, the balance sheet. I'm sorry, we're talking about current assets and current liabilities. From year one, we'll get our current assets, our current liabilities from year one, and we'll plug that into our current ratio formula for year one. We'll do the same thing for year two. Then we'll do the quick ratio, account receivables, and we will calculate all of these ratios based on year one and year two and the formulas that are in page 101. So you will have a good comparison to be able to see where this company is going from one year to the next. So there's a lot in this problem. I know there's a lot in this problem, but if you follow the examples in the textbook, it's really going to walk you through that statement of cash flows, the common size statement, and then all the formulas are here together on page 101 for the ratio analysis. If you have any questions about this, just make sure you send me an email. It's helpful when you send an email if you include your spreadsheet so I can see what you're getting stuck on, or if there's any problems with your formulas. You can also contact me during Blackboard IM during office hours. So feel free to do that. And we will talk further in the discussion area. We're going to look at Morningstar and all the information that's provided there in the discussion area this week. So that'll be pretty interesting. And I look forward to talking with you, and have a great week.